Welcome back, and you're watching Markets at Noon on ET. Now, let's pull up the charts for Syngene International and look at the stock buzzing in trading at its all-time high levels as well. And this is coming in after its Q4 numbers. That was a beat on all counts, obviously, looking at the stock move that we can realize, as well as revenue surged 31%. Now, to talk more about the numbers, we are joined by the MD and CEO of Syngene, Jonathan Hunt, joining in with us this afternoon. Thank you so much, Mr. Hunt, for joining in with us this afternoon. And, I'm going to dive right in. And, if you could start by talking to us about what has been the segmental sales breakup, whether you talk about in terms of Q4, FY23 and overall FY23 as well. We know you don't put out numbers that way in terms of broadly, but could you give us a sense in terms of how was the segments done and which segments have actually outperformed?
Sure. Well, I'll talk around it. We don't actually report segmental numbers, but I'll give you a sense of it. It was a good quarter, very, very strong finish to the year. The fourth quarter for us is usually one of the busiest ones. This one was no exception. We saw very, very strong growth, 31% revenue growth in the quarter. Almost crossed 1,000 crore. We got very close to that. But I think one of the things, if I look at the year, is how nicely balanced it was. We saw good growth through the year. We upgraded our guidance at the beginning of the year, and we saw that momentum continue to build through to what was a strong finish for the year. As you know, with our business, we really split into research services and development manufacturing services. And it was really nicely balanced, the progress we saw through the year. So discovery and dedicated centers both did well in the research services business. Quite an uplift, actually, in particularly chemistry. We've seen that as a theme through the year, as many of our Western clients are trying to catch up on ground that they've maybe felt they lost during the pandemic. And then on the development manufacturing side, really good year, particularly from a strategic point of view. We saw both the development business put in some very good performances around operational excellence, certainty of supply. So they were really operating to good standards through the year. And of course, the manufacturing business was a strong performer led by our biologics manufacturing. So nicely balanced, nice balanced growth through the year, and it gives us some good momentum as we go into the year ahead.
Right, Mr. Hunt. Harsh jumping in as well. Let me quickly ask you about the outlook for FY24 going forward. Do you see this kind of growth sustaining? And also, what factors will play out on FY24 for you in terms of tailwinds and headwinds in your business?
Yeah, if you look more broadly, I think there's some good momentum coming from a number of directions. Firstly, the point I made earlier around people catching up after the pandemic, really trying to make up for lost ground. So I think there's still a little bit more runway on that. There's China plus one, geopolitics. People are thinking much more carefully around their supply chain, where they're dual sourcing. And I see India as a destination that's really benefiting from that. And within that, that's good for a company like Syngene. And then if you look at some of the more structural things into the US market, we've seen a step down, albeit from a very, very high base, of the funding environment for biotechs and startups. They're much more sort of cost conscious than they have been in the past, as they're really looking to make sure the funding they've got can go a long way. And that's not a bad thing for a business like Syngene. We're very operating cost competitive. We have a relative structural advantage to many of our more global competitors, and that allows us really to make every research dollar that those biotech companies have go a little bit further. So there's two or three things there that I think come together and give us room for optimism for the year ahead.
Right, Mr. Hunt, also if you could just tell us in terms of revenue, EBITDA, how do you see that growing in FY24? Could you give us any sort of growth guidance there?
High teens is really where we'd expect to be on revenue for the year ahead. Of course, that's in constant currency. I'm not going to try and predict where the US dollar and the rupee will go in the year. And if you compare that, say, to the performance we had last year, if you strip out the currency benefit out of our 23% growth for the full year in FY23, you get to a low mid-teens underlying growth rate. So the high teens growth rate we're predicting for the year ahead is a step up, and that really signals the momentum that we're seeing.
Right, and what we did see last year was we did see inventory build-up happening. Inventory had started to go up. What's the situation now versus the inventory level same time last year? If you can give us some kind of a background on that.
During the pandemic, many companies took the decision, as we did, to invest in slightly higher inventory levels. Plus, a lot of the growth, that very strong fourth quarter, came from the launch of our manufacturing business, and we deliberately decided to pump prime that by running inventory levels at a slightly higher level. I'd expect that to normalize in the year ahead. But in general, I'm very happy with the progress we've made on supply chain, the performance in what have been a challenging 2 or 3 years for anybody running a supply chain. It's been very good. We've had little or no challenges around stockouts. And it's also prompted us to think a lot more carefully around our dual sourcing and the global breadth of our supply chain. We've added a whole host of Indian supply points. We're less reliant than we've ever been on China, and that allows us both to tap into the very best of what you can get out of the Chinese supply market, but also make sure that we've got that resilience and that dual sourcing.
Lastly, Mr. Hunt, could you just give us an understanding in terms of your capex spent in FY23, and also what will we be looking at in terms of capex guidance for FY24?
Actually, the two are very similar, overlapping answers. So capex in the last year came in at about $60 million. I'd say the areas I'd highlight in that, we put some more capex into our biologics manufacturing. We continue to expand. We saw quite a lot of expansion in our Hyderabad research facility. We added 400 or so new jobs there, and we put the capex in to support that. So fairly happy with the distribution of the capex application in the last year. For the year ahead, I'd expect a little bit more, closer to $100 million of capex going in, and I'd break that up. About half of that's going into the research services business, 20% or so is going into biologics manufacturing, and the remainder is spread across a whole range of aspects within the business, including development.
Well, thank you, Mr. Hunt. It's a pleasure taking your perspective as well as all that you had to say about Syngene on the Q4 as well as FY24, what to expect. But we'll quickly switch focus.